you starting the recording? Yeah. Okay. Hi, everyone. Welcome to the second episode of Coping with COVID, the series for young entrepreneurs. So my name is Jenny. I work for the Youth and Trade program at the International Trade Center, and I will be facilitating the webinar today, together with David Cordobus, the head of the Youth and Trade program. Coping with COVID-19 is a series by the International Trade Center, and more specifically by the ITC's Youth and Trade program and its year community, a community of 17,000 young entrepreneurs. We designed this webinar series to connect year business experts specialized in risk management, agile methodologies, and business planning to youth-led SMEs facing business challenges in the times of COVID-19. This week, we are joined by Riccardo Cairo, who is a credit portfolio senior manager at Citigroup in Atlanta in the US. Before we get started, it would be great if you could all quickly write into the chat where you're joining us from today. I would like to invite David now to give a brief introduction to ITC.
Thank you, Jenny, and welcome everybody, and special welcome to Riccardo, who's joining us online from Atlanta. So very briefly to introduce myself, I'm heading the Youth and Trade program at the International Trade Center. So we are a joint agency of the United Nations and the World Trade Organization. And our job is to foster private sector development in developing countries. And because we are aligned with the Sustainable Development Goals, inclusiveness is very important for us, of course, and making sure that the international trade is inclusive, particularly for women and youth. So the point of the program is really to work on supporting young entrepreneurs, but also to ensure that the private sector have the right skills to further develop, and particularly youth are equipped to answer the needs of the private sector. So we work with government, business support institutions, incubators and accelerators, and particularly as well with financial service providers. And that's an easy transition to our guest speaker today, Riccardo, who's going to guide us through managing cash flows and liquidity. It's a very interesting topic and particularly relevant on those times, and that's why when we prepared this session with Riccardo, we found an excellent fit with the current situation, because what we hear from young entrepreneurs, it's a huge struggle with liquidity, cash flow, and that's why, I mean, when we spoke with Riccardo, it was an obvious discussion to have. And I hope that you will find it useful for the future and for your current businesses. So I won't be too long, so I'll leave the floor to Riccardo, and welcome again everybody, and welcome Riccardo. Thanks for being with us today.
Great. Thanks, David. So now we still have a few words on our expert today, Riccardo, as you know by now. So he's a risk analytics expert. Riccardo has spent his entire career helping some of the biggest financial institutions in the world to assess the financial health of individuals and small businesses, to effectively manage risks, expand business with confidence, and increase profitability. He has spoken at international conferences and held workshops for banking professionals on topics related to risk management and financial regulation. Today, Riccardo serves as the credit portfolio senior manager for Citigroup, the third largest financial institution in the world. He holds a master's in economics from the University of Bologna in Italy. Welcome again, Riccardo.
Hi.
Now, to get to know you as the audience, we're quickly going to launch 2 poll questions for you here in the Zoom dialogue. They should pop up on your screen now. Yes. So the first question is, how long have you been running your business? And the second question is, how many employees do you have? We'll give you like a minute or so to answer this, and then the results should show on the screen.
All right, should I end the poll? I'm not sure if we have everyone. Has everyone voted? Get your votes in now. All right, I'm going to end it. So I'll share the results. Okay, so we have quite a varied group.
Yeah, nice. Okay, great. And one more quick housekeeping item. So if you want to speak, you can raise your hand in the chat and we will then give you the floor. And also if you have any question, just pop it into the chat. But yeah, we will have a dedicated Q&A session at the end. And now I give the floor to Riccardo.
Hi, everyone. Well, thank you for joining. So let me share my screen so that I can share with you today's presentation. Let me see. Should be here. I'm not sure if you can see my screen now. Here you go. Okay. Share.
Not.
Can you see the slide?
Yes, we can see it.
Very good.
If you can go full screen, that'd be perfect.
Yeah.
Perfect.
Okay. Okay, well, thank you again for joining this webinar on focusing on the essentials and cash flow management and liquidity. So we're going to talk a little bit about both topics today. Generally speaking, starting from the fact that this is a very uncertain time for businesses, for individuals and businesses, for your customers. And it's a level that is frankly unprecedented. It is true that entrepreneurs are used to operating in certain conditions, uncertain about your market, your customers, the suitability of your products. So there's a number of things that you don't know when you start a business, but this is definitely something that goes beyond that level. Generally speaking, we're trying to tackle the subject in terms of getting more comfortable with this level of uncertainty. And so talking about these two topics, the idea of focusing on the essentials in this uncertain time, and the idea of managing, optimizing cash flows and liquidity. So, well, let me step back a second to say that I'm not an entrepreneur, but I am an uncertainty professional. I've been an uncertainty professional for about 10 years. And I've been helping financial institutions across the world manage uncertainty, quantify uncertainty, really to get to that point, really to get to a point where you're comfortable working with uncertainty and you're comfortable incorporating that uncertainty in your business decisions. So I've been doing this in the financial sector. So this brings me to financial sector is clearly an element that is closely related to cash flow management. So we'll talk about this a little bit further in detail in our presentation. Roughly in the first 25, 30 minutes, we're going to talk about ideas around the essentials on one side and cash flow management on the other side. Now, because of the variety of sectors and industries you guys operate in, I'll try to stick to principles rather than hard prescriptions that might work well in some sectors, might be completely unsuitable for others. So the idea really is to generate a discussion, see what applies to you and what the biggest challenges are at this point from a cash flow management perspective, but more in general from a business management perspective. And I'll stop every 5 minutes or so to kind of respond to questions that might come up along the way. Second part of the webinar, we really would like to have a traditional Q&A session where, again, in a more let's say structured way, would like you to bring forward your own current businesses and challenges with the idea of thinking together about ideas or solutions to that can be implemented. So this is about the housekeeping part of the presentation. We move to the first 30,000 feet level subject, which is focusing on the essentials. So what does that really mean in this environment? Well, as a business, you might be asking yourself at least a couple of questions at this point. What are the actions that I can put in place at the moment in order to cope with this new environment? But even most importantly, is the pandemic triggering a permanent change in consumer behavior and customer behavior? We see an acceleration of the digital approach, if you like, or not necessarily only digital, more in general of the contactless approach on part of customers toward the purchase of goods and businesses. So more and more we're moving to an economy, an environment where customers are engaged in a contactless way. This was already happening in different degrees depending on sector, the geography, but now this is subject to an acceleration. The other two main dynamics that we see in the marketplace right now are definitely the shift to work from home. So on part of workers, the idea that they're increasingly working from their homes, and so less transportation, less commuting to the office and things of that nature. So with all the demand that this creates, right, the idea of like working from home and needing a setup in order to be able to work from home, right? In terms of communication, in terms of of the IT capabilities. Generally speaking, social distancing, it's hard to imagine social distancing will go completely away in the very short term. It's probably going to stay with us a little longer. And so this is another thing that a business wants to keep in mind at this point in order to not only cope with the current situation, but also with the to be prepared for the future environment where these dynamics will stay. Also, in terms of customer expectation, when it comes to the buying experience, the standard is going up. Really, your businesses, no matter what scale you're operating at, will be compared by your customers to the giants, right? So is your business going to be compared in terms of quality of the service? Think about, for example, return policies, right? Product return policies. So to your current competitors, or to Amazon, or to the big, to the big players in the marketplace. And the answer is probably the latter, right? So that's something to keep in mind, again, when you focus on the essentials right here, right now, both from a strategic and from a tactical perspective. Generally speaking, things have changed. So the question becomes, how viable is your business or your way of doing business in this new environment? And what changes can be made or can be introduced to make it viable in the short term and in the medium term? So we're gonna keep these questions in the back of our minds, knowing that they're hard to answer, and it's really kind of the answer is going to be very tailored on your market, your specific experience. But these are the questions that we want to keep in our mind. Also, when we talk about cash flow management, because this is really from a 30,000 feet level why we need to have an optimized, efficient cash flow management. So again, great time right now to for a business to reconsider, step back, reconsider some of the decisions that might have been made over the course of the past months or years. We know as a business, you make a lot of decisions on the fly, right? So you might have to do planning, but then again, uncertainty and other changes in your in the marketplace or in your business, made you make some decisions, if you like, unexpectedly. So these decisions are layered one on top of the other. And so it's kind of rare to go back and reconsider them or ask yourself, is this still the right thing to do? Is this still essential? It was probably essential when I started my business. Is it essential now? And will it be essential in the future environment? So after the pandemic, or at least the peak of it, will be fast. So again, because the idea is this is a great time to understand if your business can operate at a different scale. The scale might be smaller. The scale might be more agile. The scale might be more digital. Again, this is a great time to understand if there's a different version of your business that is more, suitable, can better adapt to the current environment. And there can be a lot of changes, right? This can apply to a lot of things, right? We start from a strategic level, and we kind of introduce some ideas from a strategic level. So from a long-term or medium-term perspective, we believe focusing on the essentials at this point really means a number of things, let's say a number of general ideas. So the first one is focus on the products and services that you do best, right? With an eye to innovation, right? But maybe at a slower pace, right? So again, this is a time where it makes a lot of sense to focus on what you have on your products, the products that you have developed and that have encountered the best response in the market. It's not a time to stop the innovation of those products. It's a time to keep it maybe again at a slower pace, because again, the current situation is probably different than the future scenario. So you want to be prepared for the future scenario, for the future environment, by making some decisions today. So focus on the products and services you do best. Do not sacrifice quality. That's a common mistake at times that is made when in situations where cash is limited, so you got to make some compromise, if you like, in your or you got to make some decisions, not make other decisions. We believe quality is important as of today. It's going to be even more important in the future, and you got to stay unique, right? You got to keep the focus on staying unique, right here, right now, and in the future. And then 2 ideas of investment. One on communication. Communication was important before. It has become a lot more important right now in a contactless environment, right? So your customers need to know at all time why your product is better, what you're working on. So again, communication, especially in a contactless environment, is very important. And then keep investing in your key personnel. Because again, that's the personnel that is going to take you through this period of time, and that you will be relying on in the future scenario. So this is from a very strategic perspective. So very, very long term. These are things that you wanna keep in mind. From a tactical standpoint, so right here, right now, what can be done? Well, the amount of things that can be done in the short term, by definition, is a little more limited. From a tactical perspective, focusing on the essentials might mean optimizing the variable part of your costs. Any business has fixed costs, which are commitments that you kind of took on in the past and can be modified really, really quickly. And then cost component that is more variable, right? So you can kind of intervene a little more quickly to find cost efficiencies. Or from a personnel perspective, find forms of collaboration that are a little more flexible and allow you to respond to, you know, the decrease or increasing demand that you might have during this period, during the current pandemic. This is more from an expense standpoint, from a cost perspective. From a revenue perspective, which is, I know, top of mind for a lot of you, really, this might be a time where it's kind of difficult to expand your current customer base for logistical reasons mainly. And so it is important to focus on customer retention, customer nurturing. Again, communication, we go back to communication, communicating about your products, your current offering, your upcoming offering. It is a great time to focus on customer education. So yeah, if you have ways to engage with your customers, for example, social media, or could be just even by phone, it is a great time to share stories about your product, why you do what you do, your company, the story of your company, your employees, so the story of your employees, who's behind your products and services. And on the other side, it's a great time to receive feedback and to kind of collect that feedback, which is, at the end of the day, fundamentally free market research, to kind of gauge levels of satisfactions about your product, and possibly start, you know, incorporating those that feedback into your product development. In general, to do all these beautiful things, you need to have funds availability. You need to have available resources. So preserving cash, and we'll define cash in a little while, optimizing cash, having a stricter focus on your ability to generate cash is increasingly important. And I'm talking about the ability of your business to generate cash, rather than the ability of your business to retrieve cash from other sources, which we'll talk about it, but my main focus today is really on your operating, we'll call them operating cash flows. So I'll stop here because I saw in the chat box that we might have already some questions. Do we have some questions, Jenny?
So for now, we had a question just of someone that wanted us to share the presentation. So just for everyone, I've just sent this in the chat as well, but we will share the slides at the end of the session, and the recording will go live on YouTube as well.
Yeah, so let me go full screen again. Okay, so if we don't have any questions so far, I'd like to spend some time on cash. So what do we mean by, and we use these terms a little bit interchangeably. So what do we mean by cash? What do we mean by cash flows? And what do we mean by liquidity? Well, so liquidity and cash, I'll use interchangeably liquidity and cash to kind of talk about the idea of liquid funds. So talk about the idea of currency equivalents that you can access quickly, immediately, to use purchase, to purchase goods or services. Cash flows are more the generation, so the flows, right? So the generation of that cash, right? So if you like, the variation of your stock of cash from one period to another. So here I report a very simple formula where cash at hand today is really equal to cash at hand yesterday plus your cash inflows minus your cash outflows. Now, if you operate in a business where you do not have a lot of credit related let's say transactions, both from the revenue side and from the expense side, really cash inflows and cash outflows are basically your revenues and your expenses, right? But when we talk about types of cash flow, there are different types of cash flow, right? So you can get cash from a number of places. So mainly from a theoretical standpoint, it's normally distinguished between operating cash flows, which are generated by the production and sale of your goods and services, right? So it's what your core business generates, right? Then you have other types of cash flows. You have what they call investing or investment cash flows, which are generated by the purchase or sale of an asset. So if you purchase, you're going to have a cash outflow. If you sell an asset, you're going to have a cash inflow. What assets are we talking about? Well, we're talking, for example, think about a machinery that your business is not using anymore. And so you decide to sell it, right? So that's really not your core business, right? It's not your core business to sell that machinery. The core business is to sell your good and service. So that generates cash, but it's not exactly the same thing as the operating cash flow, which are really related to how good you are producing and selling and cashing, your goods and services. Or you might have financing cash flows, which are generally speaking generated by the external financing. It could be a loan from a bank. It could be resources made available by an investor, like in equity terms. So, or the reimbursement of those. So in case you're talking about outflows. So again, we distinguish between these three types of cash flow with a focus on operating cash flows. Again, the idea that needs to stay in the back of your mind is that this is a good time to make sure that you are generating on a consistent basis operating cash flows, right? Which is important because, for many reasons. But simple reason is that ability will allow you to fulfill your financial obligations and to make those investments that we were talking about before. It's also important because oftentimes companies default or go bankrupt due to imbalances between their cash inflows and their cash outflows. What does that mean? It means that there might be at times in the life of a business a mismatch. So you might have a time where you have a lot of outflows and your inflows are maybe 2 or 3 or 4 months later. So you're expecting them, right? They will come, but not at the right time. And so that type of imbalance is really what oftentimes will make a business unviable and make it go bankrupt. And so it is important to be able to also manage this timing perspective, if you like, okay? And there are practices and tools to do this. And some of them might be applicable, some of them may not, but it's important to know that there are. Generally speaking, cash flows are important because your business gets evaluated on that. So for example, when you apply for a loan or you apply for other forms of financial support, banks will evaluate your business also based on your past and future ability to generate cash flows. So that's a question they will ask, and they will want supporting documentation, if you like, to show that your business is able to generate cash flows on a consistent basis. From a payment perspective, in those countries where payment information is stored by an organization, an organization called credit bureau, payment information, transaction information is used and accessed by financial institutions to evaluate your business. So it's kind of very important to be always able to manage your cash flows effectively, and so that you can fulfill your financial obligations toward your suppliers, toward your lenders. In a very simple schematic way, if you like, if you assess your cash flow position at a certain point in time, it's an exercise of forecasting, and it could be as simple as sitting down, writing down what your expectation is in terms of cash flows and cash inflows, period by period, right? So in this very simple example, I'm kind of simulating, or this is a mock-up example over 7 weeks, where you can see that you start at the beginning of week 1 with 100 in cash on hand, and then stuff happens, right? So you got cash inflows and cash outflows, and then you have a difference, at the end, which determines your cash on hand at the end of the week, right? So this is a very simple example that, if you think about it in your own experience, you probably know that there are times of the year, even times of the month, where you have more cash inflows than cash outflows. Really depends on your sector. You might have moments of the year, times of the year, where you have to pay your employees or you have to pay suppliers. So that's a moment, looks like week 4 in my example. So there's a lot of cash outflows, but at the same time, a little amount of cash inflows. So again, one exercise that is important, and we kind of want to stress the fact that this is a great time to do that kind of self-awareness exercise, is to try and forecast at the best of your ability what those cash inflows will be, what those cash outflows will be, to understand if you have moments of imbalance in your, in the coming weeks or month. Sometimes it might be very simple. Sometimes it's so simple that businesses overlook it, especially when businesses start, and that happens at a certain point, might happen depending on where the industry you operate in, start maybe decoupling cash and transactions. So maybe they start selling on credit, which might mean, for example, you sell your goods and services, but your customers are allowed to pay 30 days later or 60 days later. Typical. So that creates a difference between revenue and cash, and that can create, if you don't manage it very well, imbalances in your cash flows. There are ways to measure, let's say, your position from a cash flow perspective. And I'm a numbers guy by background, so I tend to put formulas a little bit in my all my presentations. Here are 3 ratios, which are pretty standard ratios, that you can easily calculate in order to understand where you are with regard to liquidity, with regard to cash flow. One is called the quick ratio, or the acid test, and really it's the ratio between cash on hand, liquid securities, receivables. So everything that you can expect to be liquid in the short term over your debt obligations, which is, in other words, all your financial obligations within 12 months. That number should be pretty consistently above 1, right? So you shouldn't, it might happen for it to drop below 1, depending on the period of the year, but generally speaking, you should have enough resources to cover, liquid resources to cover your upcoming financial obligations in the next 12 months. And you can calculate it over 6 months. But the idea is to kind of compare what's liquid, what can be used for payments, the purchase of goods and services, and your upcoming expenses over the short term. If your business allows cash and credit sales, so if you have that type of, if you allow your customers to have that type of flexibility, it might make sense to start computing the next two metrics, which is days sales outstanding and days payables outstanding, which are practically an estimate of the time it takes for your business to, in one case, convert credit sales into cash.
Call back.
And maybe if we can, somebody can.
Sorry. One of you has a microphone on. Vesa, could you kindly mute yourself?
Thank you.
Hi, could you kindly mute yourself, Vesa?
I'm gonna, sorry, one sec, guys. I think this person is not supposed to be in the webinar, so let me just check that, what's happening. Okay, there we go. Okay, all good.
Thanks.
Okay, so let me go back to days sales outstanding, days payable outstanding. So the idea is how much time does it take to convert credit sales into cash, or how much time does it take for your business, which on turn grants you credit when you purchase supplies, for example. How much time does it take you to pay? So it's the other side. Again, so for example, if you take days sales outstanding, you will hope for that number to be relatively low, right? So if you take your average outstanding credits to a customer in a period of time, let's say 1 year, and you divide it by your total annual credit sales, and you multiply by 365, then you get the number of days it takes to convert the credit sales into cash. And again, an effective strategy, an effective cash flow management strategy will bring that number down. Now, I'll move to the cash flow management part now to talk a little bit about some of the techniques, on one side, some of the practices, and on the other side, some of the financial solutions that you might find useful for cash flow management. From a practice perspective, some of the more standard practices are ask your customer for a deposit up front, so you can kind of reduce your exposure to the customer in terms of total amount owed. Bill more frequently. So again, that's another thing that is kind of important. Oftentimes, you see businesses billing on a not very frequent basis, maybe once every 3 months. So one idea is to bill more frequently, increase the frequency of your invoices. And generally speaking, another thing that is often overlooked is to contact and collect on past due invoices. So, and oftentimes, just the contacting part is can go a long way. So just contacting your customers, your creditors might yield very good results at very low cost. In the financial sector, so if you look for external solutions for cash flow management, really we see two types of solutions that are somewhat standard. Factoring, where you sell your invoices to an external company at a discount. So the invoice is worth 100, you sell it for 90, so you forego 10, but in return, in exchange, you get that 90 without waiting for the customer to pay, and then the third party will take care of collecting the revenue from the customer. That's a solution that might be available depending again on your geography, on the offering in your banking system, or invoice discounting, which is, it's not a sale of your invoices. It's really borrowing funds using your invoices as a guarantee. So in other words, the bank will collect your guarantees in case you don't pay back your loan. So they're used as a collateral instead of selling it. But the responsibility in the management of your invoices is still yours. And so there's no, in this case, there's no discount. I'll stop here again to see if there are any questions outstanding at this point.
So we have none in the chat, but if you want, whenever you're ready, we can start with the Q&A from the registrations.
Yeah, sure. Well, I'll just close by kind of stressing out the takeaways from today's webinar, which is again 30,000 feet. This is an environment that might require you to rethink your business on a different scale, smaller, more agile, digital. This might require some changes, and the availability of your liquid funds is key to be able to make these changes from a strategic and tactical standpoint. Cash is key in order to being able to generate consistently cash flows is very important. Also because your business, so also to be conversant about cash and your cash position is very important, because businesses are evaluated by investors, by financial institutions, among other factors, also based on your past and future ability to generate cash flows. And there are practices, so instruments that you can use in particular to manage your cash inflows. So I'll stop here, and maybe we can take some of the questions that we have in the pipeline.
Perfect. Thank you so much, Riccardo. This was super informative, and I hope very helpful to the young entrepreneurs joining this webinar. Just quickly before we start the Q&A session, there's one more poll we want to launch. Should come up now. And the question will be, what is the outlook of your business for the next 6 to 12 months? Yeah, so if you could all answer that, that would be great. We'll give you 30 more seconds.
I think we got pretty much everyone, Jenny, so I'll just close it.
Yeah, just share the results. Okay, great. A lot of you are feeling somewhat optimistic. That is good to hear. Okay. And David will now get started on your questions that you all submitted when you signed up for the webinar. But if you have any other questions, please feel free to ask them in the chat or to raise your hand. Okay.
Thank you, Riccardo, and thanks a lot for this very interesting presentation. And actually, yeah, as I was saying before, talking to entrepreneurs, and I mean, it goes beyond the fact that they are young entrepreneurs or women entrepreneurs. It's entrepreneurs in general. When you ask the question, what are you taking care of currently? Cash flow is, I think, one of the top items that captures their attention. So of course, it's very useful, and these strategies in a way are also valid, of course, when there's no crisis, but currently particularly. And before this session, we gathered some questions from some of the participants, and people came in with from different regions of the world. And I have one coming from a country that measures happiness, actually, Bhutan. And the question is from Kinle Tenzin. I hope I'm pronouncing the name correctly. It's how to balance profit and social objectives for social enterprises. I mean, it goes beyond a bit the cash flow in itself, but I don't know if you have any insight on the balancing between profit and the social objective for social enterprises. Do you have any experience on that?
Well, so I mean, generally speaking, I will say that what we talked about really applies to any type of organization, whether it's managed for profit or not for profit. If in this case, we're talking about a not for profit organization, there are for-profit organizations that have social objectives, social responsibilities. Yeah, you're right. I mean, it goes a little bit beyond striking a balance, let's say, between profits and those objectives goes a little bit beyond, what cash flow per se can do. But generally speaking, if you have objectives of different natures, it is important to be very deliberate about managing your organization wisely at a time where self-financing is very important, right? So it's very important in general. The ability to generate operating cash flows is very important. In the short term, it might be even more important. So again, if you want to pursue those objectives, I think being always in a position where your cash is managed wisely is very important. Again, I want to stress out the fact that oftentimes companies go bankrupt or disappear because of lack of good management from this standpoint, and they disappear because of the mismatches that they have between the cash inflows and the cash outflows. So it's a form of responsibility toward your business to be very mindful about that. Striking that balance is really, it's a choice of your business, and is a difficult exercise. So because all businesses, also the ones with social responsibilities, have also investors, have also the need to, they have employees. So they need to be able to be healthy and profitable and managed in a wise way to be able to pursue also those social objectives. So wherever you will put your business on the spectrum, let's say, I think it's important to employ, very wise, reasonable techniques to manage your cash. That's
thanks for the answers. And there's a question. It says user one. I don't know who is it. Need more clarity on selling invoices to improve cash flows. But I don't know if user one is still online, and maybe she or he can explain further the question.
Yeah.
May I call on user one? Yes. Please ask your question. Maybe introduce yourself and ask your question.
They're unmuted, so they should be able to respond. It's whether they are there to respond. Yeah. User one is okay. It looks like they're not going to respond.
I don't know if you have enough elements, Riccardo, to answer the question.
Well, so yeah, I can provide a little more information about factoring as a tool. It's a pretty common tool. Really, it depends, and I don't know where the participant comes from, but it probably depends the availability of that financial instrument or solution, depending on whether it's offered by the specific banking sector. Well, the idea is actually very simple. You have invoices towards your customers. And there are companies out there that are willing to purchase your invoices at a discount. Now, that discount might change the equation, if you like. So if the discount is too much, you might think, well, I'm foregoing too much money to have immediate availability of cash, right? But the idea again is an invoice is worth 100, you sell it to a third party, they buy it for 90. At that point, you relinquish the ownership of that invoice. The invoice is fully transferred to the third party, which will collect the actual payment from the customer, which will collect 100 in exchange for foregoing, a little bit of that invoice, a little bit of that amount. You get 90, before, let's say, the due date. Okay, so again, it's something that, as everything, it really depends on the terms. It really depends on your, need to raise cash. But that's something that, and I'm seeing. So I'm seeing the question. So you told us one way of managing cash flow, selling invoices to other companies. No, not to generally speaking other companies. There are companies that are specialized in doing this job, and they're called factoring companies. And you can look it up in your, let's say, banking sector, or generally speaking financial sector. So it's not general companies. It's not like my company buying an invoice from your company. These are specialized companies that buy invoices at a discount and then will collect the payment. It might be available, it might not be available, or the terms might be favorable or not, but it's a specialized company.
And Riccardo, would you say that this system applies to any kind of countries? I mean, not necessarily going into
it's
detail.
Pretty common. Yeah, it's pretty common. It's a pretty common practice, I would say, across the world.
Okay, so if I'm in Kenya, if I'm in Bhutan, if I'm in Spain, US, I could find this mechanism in place.
Yeah,
going to the bank, basically.
It will be going to the bank or going to these specialized companies, which are technically not banks. They're called factoring companies. So, but it's a practice that has been around for a long time. It's a facilitation, right, for businesses, and it's pretty common. Again, it might be a solution. It comes with a cost. So ideally, you will want to, manage your invoices and get paid in full. But at times, it might make sense to rely on that type of solution to raise some cash, foregoing some, with a cost, but raising some cash right away. Okay. So
sorry to interrupt you, Riccardo, because there are questions piling up. And Jenny, there's someone who would like to intervene, right?
Yes. So from what I understand, Kennedy raised his hand. I'm now unsure because he said in the chat that he has trouble connecting via audio. But let's try and unmute him in case he had a question and wanted to answer.
Maybe you can type the question in the chat.
Yes.
Yeah, unfortunately, he's having some problems, so I'm not sure I'm going to be able to unmute him. So let's go to the next one.
So maybe you can take another one. Do we have another one on the chat that we missed?
No, not currently.
No.
So,
okay. So there was a question from Tanzania. It's Ellen Muniz. How do I maintain a healthy cash flow and still invest more in the business? That's a tough one.
That's a $1 million question. So, so let me say that again. What we wanted to stress out today is that it's important on your part to do this type of self-awareness exercise. This might be a time where your resources, your cash flows are more limited just because you have less growth, it's more difficult to deliver your goods and services to your customers. I think it's important to make reasoned choices around where to invest, and really that is a very personal business level question that depends on the industry you're in, the market you're in. From a high level perspective, we believe this is not a time to stop investing. This is a time to focus your investments, if your resources are more limited, on certain things. And at a high level, without wanting to be too prescriptive, because we don't want to tell you how to run your business. But at a high level, it looks like communication is very, very important in this environment, and probably this is going to stay in the future. So that's an area where it might make sense to keep your investments up. Innovation, well, it's probably prudent to not completely, reduce or bring down to zero your investments, your innovation, but it's a time to focus on your best products, the products that you do best, right? Again, and this is a time of uncertainty. It's a time of conservation. So in an ideal world, if we have like unlimited resources, we will still do whatever, we were planning to do. But again, this is a time where, you have to manage your cash wisely. You have to optimize your cash using those techniques first and foremost, and then potentially, if it's needed, using those external solutions to raise some cash. And again, we haven't talked about other ways of raising cash. We just touched on that: the investment, the financing, because it's important to keep a main focus on your operating cash flow. Now, the balance between the three types of cash flow, like getting your resources from an external investor or from a bank, that balance really depends on where you are in terms of development with your company. Or if you're a startup, startups typically have very limited cash flow capability. Well, they generate very little cash flow from their operations, right? From the sale of goods and services, maybe because they're building them, or maybe because they are, they're getting into the market. So they have a strong need for external financing, but that's clearly not the long-term solution. The long-term solution is being able for your business to, generate cash from your operations on a consistent basis. So it's difficult. It's a difficult thing to do. And what we wanted to stress out is part of it is self-management. Part of it is, if needed, external support on part of financial institutions and other specialized providers.
So yeah. If I get it correctly, I mean, communication could be that promoting your services and product, particularly using digital channels, because going out in some countries might be difficult. Printing materials might be difficult. Yeah. So using, to the extent possible, digital, this is something. But communication is a right way. Innovation, it's interesting. I don't know if you've seen that even businesses switching their product use to COVID-19 responses. Like I could see alcohol providers, alcohol to drink, they were switching this to doing to make gels and voilà. Yeah. So and to what extent the product and service they offer could fit into this crisis, and innovation as well, even in the way you deliver your product. Restaurants, they switched to online delivery. At least in Switzerland, they could do that. So that's an important asset. Do we have any other question on the chat? Looking at the clock as well, it's already 5:30. My God. Doesn't look like. Do we have Kennedy with us who wanted to ask his question? I don't think it was possible, and the chat doesn't work. Maybe in terms of, because we are in the trade environment, Riccardo, and many borders are closed, planes grounded. For those who are in the export business, would you, I mean, maybe it's a question to the International Trade Center in a way, but I'm asking it to you. Is there any specific recommendation you would make on how to cope with these closures and the logistic ban and this kind of thing?
That's a challenge, because there are logistical issues in terms of moving cargo from one place to another. So it's kind of difficult to see in the short term another way to deliver, let's say. So I assume that you're referring to the delivery of goods that cannot be,
exactly,
or it's not services that can be performed online. It's not intangible products such as software, an app, IT or things of that nature.
I guess recommendation would be to start thinking about the local market, domestic market at least, and try to find new customers. But even though it's a hard one, but still.
Absolutely. And I know that there was a question about currency in particular for cross-border companies, right? How to manage those. Now, again, there are tools, and we can probably talk separately about that. I know there was a question about basically cash flow hedging when you have expenses in one currency but revenues in another currencies. There are tools for that provided by the banking sector to hedge against fluctuations, technically. So to make sure that if you need to pay a supplier in one currency, basically you can buy the currency today at a price for delivery at a certain point in time in the future. And in fact, they're called future contracts or forward contracts. So that you kind of reduce the uncertainty around the fluctuations in the currency, and it comes with a cost, of course. So you got to pay a fee to the bank, but in exchange for that, the bank will take some of that risk, basically. That's the idea, right? And they will give you that amount of money that you need, let's say 3 months down the line, at a pre-specified price. So there are tools. They're very standard tools in cash flow management. So I think they're probably available all over the world, especially in this period of time. I was looking yesterday at some, currencies against, if I remember correctly, it was against the US dollar. Over the past couple of months, we have, experienced, notable depreciations in certain currencies. So that's another thing probably to keep in mind. If your business operates on the revenue side or the expense side in different currencies, then it might be useful to talk to your banker about cash flow hedging, foreign exchange hedging, because it might be a useful solution to kind of smooth out those fluctuations and kind of remove that risk, or reduce at least that risk. So it ties into the export topic, oftentimes.
No, it does, absolutely.
Exporters are subject to these fluctuations, so it's important. And there are tools. There are tools available to kind of at least, manage that risk.
We have the question from Kennedy finally that I can see on the chat. It's well, you can see it as well, but I'm reading it for everybody. How do I manage my cash flow as against credit facilities with my clients, since my cash flow is dependent on the frequency of credits I offer, and to my customers to pay back over agreed credit periods?
Yeah. So, like we said, right? So, and I don't know what terms you grant to your customers, Kennedy. It's very dependent upon the market, practices might be 30 days, 60 days, some countries even 120 days. So it might make sense, like we said, to ask for manage your credit sales by asking for a deposit up front. Now, if we want to get a little more complicated about this, you might want to kind of distinguish between customers that are a lower risk versus a higher risk. And again, there are ways. This is typically the job, providing this information to a business is typically the job of a credit bureau in a lot of countries. So these credit bureaus maintain data and information about not just individuals, but also businesses. So for example, that's the first thing that comes to mind. They might provide you with a report. Again, it comes with the cost, but it might be worth looking at it if it reduces the risk of not getting paid. They might provide you with a report about the business you're working with, the agricultural business that you're providing inputs to, about their payment performance. And if you see that their payment performance is not very good, you might give different type of credit terms. So you might ask for a higher deposit. So there are ways. You can also, do it yourself based on your own experience with your own customers, right? Generally speaking, it's a great idea to go and ask the bureau, because the bureau collects information from the entire market, not just your customers. So you're kind of leveraging somebody else's information, if you like, right? So that's
your recommendation: go to credit bureau and check on the overall market, but also to what extent you can accept some conditions for the customer.
Yep.
Good. It's already 20 to 6, at least in Geneva, and we're getting to the end. Maybe if we have more questions coming to us, Riccardo, offline, maybe we can drop you an email. And get some answers for our participants. I would like to thank you again for this very, very interesting presentation and discussion. And we already received a lot of very positive comments from our participants. And thanks again for this episode 2 of this series of webinar. And I leave the floor to Jenny.
Yes, thank you, everyone. Thank you so much, Riccardo. It was really great. And I'm super happy we can make this recording available for everyone on YouTube. So quickly now, to end it, we're going to launch one last poll where you can give us a score from 1 to 10 about how relevant and informative you found today's webinar. Should you have any further comments or questions, please send them to youthandtrade@interason.org, our email, which you can find on the slide that you see here. Furthermore, we invite you to take our COVID-19 survey for young entrepreneurs. We are basically asking for the challenges and the opportunities that you currently experience during these times. And under the same link, so you'll see the QR code. So the QR code will lead you to the survey in 3 languages, as well as to Riccardo's slides. So they're available for you there. Apart from this, the Youth and Trade program has also launched further resources to help you, such as the first aid kit for young entrepreneurs. You can check our social media to find out more. We're always posting updates, every other day. So yeah, just stay tuned. So thank you again all for joining. We will make the recording available on YouTube. I will send the link around tomorrow latest. And please stay tuned for episode 3, which will air on the 19th of May. Thanks.
Thanks, everyone.
Thank you. Thank you, Riccardo, again. Huh?
Thank you. Thank you for joining.
Thank you, everyone.
Ciao. Ciao.
Bye-bye.
That was a nice presentation, Claire. Good to know. See you again.
Ciao. Thanks, Solomon.
Great.
Thank
I just
you.
enjoyed
Nice
it.
time. Okay.
Thank you so much.
Oh, okay.
Nice presentation.
By what?